Hi, I'm Jeff Hirsch here at the Money Show with Bryan Perry of BryanPerryInvesting.com. And can you tell us how you are looking for income in this rising rate environment?
Sure, Jeff. We're seeing the ground is shifting under the bond market, and I think we're all pretty keenly aware of what's happening. And there's a lot of adjustment going on in portfolios here. So it really matters as to where can income investors go outside of, the really low yielding tip market, or stocks that really don't pay much of a dividend yield.
Sure.
And trying to be a little bit creative here, because we're still in a very low interest rate market, regardless of the fact that it's still moving higher, but still off of what level? Okay, so off of zeros.
So where are you finding these good yields in this environment?
Well, we're using what are called floating rate business development companies.
So that's like an alternative investment?
That's correct. And these are lenders to small to medium-sized businesses where they make loans, and they are tied to the LIBOR rate. Okay, so they may issue those loans at 7, 8, 9%, but they're also tied to short-term interest rates. So if interest rates rise, those loans are reset at a higher level, and therefore the lenders get a higher stream of income, which helps the dividend yields go higher and maintains, following the interest rate market higher.
So what kind of a product or investment vehicle are you?
Well, for instance, you can look at like the BlackRock Floating Rate Income Fund. Okay. Symbol FRA. Okay, pays around a 5.5%.
ETF?
Yeah, ETF. Yeah. Closed-end fund, actually. Closed-end fund.
Okay.
So paying 5.5%.
End-of-day liquidity.
Yes. And so you've got monthly income. It pays monthly, and it's a good 5.5% yield. That's just one place to look at.
5.5% is nice these days.
You can get a little bit more aggressive and look at Pennant Park Floating Rate Income. PFLT pays about an 8.5% yield. Also monthly income, very sound management.
Sure.
And again, most of these funds haven't really moved yet with rates moving higher. Everything's just kind of like on hold while we go through this correction. However, as the market sorts between the wheat and the chaff, going into this new environment, I think you'll see these floating rate senior loan funds start to outperform.
Excellent.
Yeah. Additionally, one of our areas, the MLPs, they're coming back to life.
They've been kind of quiet.
They were rinsed out last year in late November. A lot of tax loss selling. Been 2 years of just a lot of pain, and at the same time, oil prices came back a lot further than I think people were expecting.
Sure.
Very unloved trade late last year. Starting to find a little bit of affection now, and they moved up strongly in January, pulled back, present a good entry point in my view.
Excellent. Thank you very much, Bryan.
Very good.
Thank you guys for joining us.